Well, in fact, joining us for more on the currency markets and the dollar debate, if we could call it that, is Jamal Mecklai, Chief Executive Officer of Mecklai Financial Services. Mr. Mecklai, thank you so much for speaking to Bloomberg UTV. How do you gauge the dollar's move in 2010, considering that the world economy is recovering from the crisis? Will the dollar be a loser against major as well as Asian currencies for that matter? How do you see that panning out?
Actually, I have something of a contrarian view. And I think the reasoning is that I don't think the world is ending. The entire scenario and concern that everybody had, which is that the dollar has been falling and falling and it's going to continue to fall and fall and fall, is in a sense an end of the world scenario. End of the world in that the new world will be completely different than the old world. Now, I don't think it's that bad. Growth has returned, as you've said. Granted, there's a lot of liquidity in the markets. So I would say that the bigger risk is that the dollar strengthens rather than weakens. And if I would bet, I would bet that it'd be higher in December 2010 than it is today. But there I'm not betting.
Right, but there's a lot of talk of the dollar losing its status as the reserve currency, but the US maintains that it will have a strong dollar policy. Which of these views would you agree with, and why would that be?
Well, I think that the dollar's status as the leading reserve currency in the world is not yet changed. Okay, we've actually done some research and we published a report which shows that in the advanced countries' books, dollar reserves have fallen from 70% to 66%. In emerging economies, it's only 59%. In India, our research suggests we only have 50% dollars. But that's still 50%, or 65%. So it's still the biggest daddy in the game. And I think over time, let's say, but it'll take maybe 20 years, maybe you will see that 50, 55 come down below that as the euro strengthens, as maybe the yuan comes into play, but we're looking 10, 20 years.
Right, Mr. Mecklai, but talking about the India context, as you mentioned, will the dollar continue to be a reserve currency for India? What's your view on that? And is there a possibility that central banks, including the RBI, of course, that they will shift their investments to Chinese yuan or the euro for that matter?
Well, again, like I mentioned, we've done this research which shows that RBI, in our view, has actually been very aggressive in diversifying. They have announced that they have 7.5% of their reserves in non-SDR currencies, which is Aussie, Canadian dollar, etc., whereas the rest of the world only has 2%. So what we think is that RBI has diversified quite a lot, but we're still seeing 50% dollars. I'm not sure. There's really nothing else. 50% dollars is probably about 35% euros. There's really not a whole lot else they can do.
Right, but my last question, does India really need to take measures on curbing capital inflows, considering the fact that the economy is just rebounding and foreign investor confidence into emerging markets like India is playing a key role? Aren't capital flows key for narrowing the current account deficit going forward?
There may be short-term hotspots, but in general, I don't see that as an issue. Taking your question a little more broadly, in principle, I don't think there's anything wrong with policies like Brazil has implemented, the Tobin tax, etc. But they should be targeted and short-term. Again, I repeat, I don't think India is anywhere near that situation right now.
Right, Mr. Mecklai. Jamal Mecklai, Chief Executive Officer of Mecklai Financial Services, speaking to us on the dollar debate and, of course, what's the future for the currency. Thanks so much, sir, for joining us on IBD Plus tonight. In other news, well, we'll take a quick break. After this, we take